Good morning, traders. Welcome to the Traders Lab. I'm Tom B., streaming live Monday through Friday, 11:30 a.m. to 1 p. Eastern Standard Time. This stream is about market mechanics, understanding market behavior as seen through the lens of auction market theory using a tool called the volume profile to integrate the behavior of the market in the intraday developing time frame. Essentially what we are looking to do is use order flow tools for integration in a more micro time frame in alignment with higher time frames to take advantage of potential outsized move or larger rotations in the market in order to meet potential risk reward parameters. This is not trade recommendations. This is strictly for educational purposes. The idea is to help you understand how the market works and how you might integrate that behavior into your current trade plan or potentially use it to align with other tools that you might be using. One of the key components of understanding the auction and how markets operate is that they're not one-dimensional, but they operate on multiple levels inside of themselves in a fractal nature. In other words, what you might consider time is actually fractal. Remember, the market is not on the clock. The clock is a human invention. The market is only really subject to open, close, reports or external events that may cause it to reprice. In addition, it is shifting contexts interday. So what might be directional, as we've seen this morning, at one point can turn rotational. And that is actually a different type of behavior to potentially engage in the market. And again, this is for educational purposes. We're going to do a brief review of this process. If you're new here, thanks for being here. If you're in YouTube, please, you are in a 15-second delay. If you post questions, I will attempt to answer all questions that are relevant to the larger group. Thanks, Paul. Good to be back. General disclosure: all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. This is not a trade calling room. This is strictly for educational purposes. We look backwards and we look forward. So let's take a look and get caught up. Now, yeah, I think we'll kind of stick to our format. Because there's always new visitors, or you need a review. And the reason I do this is because we learn through repetition. And we can get very myopic in what we're trying to do without understanding how or why. If you can get how or why integrated into your thinking, you then will be able to potentially get into better alignment with what the market is trying to do. And during the day, the market's not one size fits all. It is actually going through different behaviors. If you can separate those behaviors out, you might actually be able to integrate your activity with better alignment. And again, past performance is not indicative of future result. Auction market theory is simple. It's just shopping. You go to the store, you're participating in an auction. If the price is below, let's say we have a retail price and it's $1, whatever it is, and it goes down to 75 cents. You perceive $1 as the retail price, but 75 cents a deal, you buy more. That's what motivates you as a buyer. If the price goes back up to $1, you'll still engage because that's retail, you're used to paying it, and it's a fair price. If it goes up to $1.25, $1.50, you may say, you know, that's just a little too expensive. You'll look for an alternative or you just won't buy it. That's how the auction works. So the price is moving up and down to engage buyers, and if we're just assuming buyers at the moment, if the price goes too high, you don't buy it. If you sell that product, what do you have to do to engage the buyer? If the price is too high, you have to lower the price. So if the market is selling off, you are looking for buyers. And the market will go as low as it needs to go to attract buyers. Now, to give you an idea how this might work is you'll notice that the market rotates during the day. Well, the auction takes place in all fractals or time frames. In fact, we just had a short scenario just set up here. I'll talk about it after we get past this. The volume profile is the representation of how this happens. And the reason volume is important is because that shows you where the interest is. For example, that retail price, high volume, right? Buyers and sellers agree. And then where we move away from that retail price. The market moves around checking prices in all fractals or all time frames. And by using a tool like Bookmap, which is an order flow tool, we can see these microstructures where this actual auction takes place. And lots of times the way I try to visualize it mentally, and I think it's sometimes important to connect something like trading to things we experience day to day in our lives, is if you go to a convenience store, there's a lower price, that's a sale, and there's a higher price you won't pay, and there's an agreement at a retail price. Now, a convenience store doesn't do big volume, and let's just say it's a small interaction, a short time frame interaction in a convenience store. Well, that has a retail price, and what might happen is we can go and shop in that store in a microstructure because it's a convenience store, not high volume, and see the same behavior of the auction. And then if the market moves away, it is saying that retail price is unfair. And then the buyers and sellers en masse move to a different location. That is a somewhat of a snapshot psychologically or mentally how you might visualize what's going on in this auction that takes place at all price levels in the developing time frame. Context is the thing that throws most traders off, I think, because we can start out one way, two-sided trade, we can break away from it, and then have range expansion. In other words, the market moves directionally, then it pauses, checks an area, rotates a little bit, moves away from it. That's context. And the context changes in all fractals or time frames. It's a recognition of context and the potential changes that I think are really key, and where many traders get out of alignment and then unfortunately might have a bad experience. Bookmap is the order flow tool, lets us see the activity of the book, where that liquidity is added and pulled, algo behavior, higher time frame, lower time frame interactions, and microstructure. So I hope you find that useful. Now I want to show you the higher time frame, and this kind of, I think, will give you a sense of auction market theory and how it works in a higher time frame. And I have to tell you, it was over years of observation of this that really got me to accept how the market operates. Before this, I was driven more by shorter term structure, classical charting patterns. When I'm going back now to the early 80s, you know, when I first came upon market profile, which was time-based because we didn't have volume. But it took me a while to kind of get out of my head to be stuck in these little, you know, the inner day, and to look much beyond it. So here's what we have, and I want to go back. This is the recent consolidation we had, and if you guys remember, this was an inside day that was neutral, and we knew with an inside day the possibility exists. This is now being a consolidation that we can break up above or below, but we also kind of figured, you know, the lay of the land is short. So the probability was we would break out to the downside. What we don't know is when. Well, here was our breakout. And where did we go? If anybody remembers, 42.15, 42.16 was this level. This was an important level coming up. This was an important level that we tested coming down. So this was our check of this level. We go up here, chop chop. This is a consolidation. This creates our new retail. So you know how consolidations work? It's the shopper. Oh, it's on sale. This is too high. I'm not going to pay that. And what it's doing is, as it consolidates, this is where the fairest price was. In other words, retail in this consolidation. Now, you guys know what consolidations are. It's two sides, and one side's going to throw the towel in. Well, in this consolidation, and notice we have this little bar here that closed, that checked it, the retail, and closed above it, leaving a tail. That's what set this up. Breakout. What do we check? This level, which is from a consolidation way over here. Okay? Check it from above. Check this body of this candle, too low. Off we go to the next level. Too high, too low, too high. And now we consolidate. Okay? Creates 42.76, retail, too expensive, breakaway. Now watch. Here's the big gap. Start consolidating, come back to 42.02, come back to, I think this is, I can't quite see it. Let me take a look. Didn't quite get back to 15. Sorry guys, got to run over to another chart. 42.06 quarter, it looks like. Didn't get back. This is saying too high. And now you see this. Now, here's another interesting thing. This consolidation from over here, 41.22. It was important on the way up. It was retail. Too low. Remember? Check. Check. Too high. Boom. Break. Check. Right to 40.22. Pullback. Can't quite get there. Break. Under 40.22. Too high. You see the behavior. Big sell-off. Yesterday, a little tries to recover. Today was either going to be potential squeeze or continuation. Where does it go? Now again, these are not recommendations. This is just a tendency of how an auction behaves. 39.69, and this is off of this consolidation. Currently, what is the low of the day? Anybody? $68.5. Thank you. Can you guys see this? 39.69, which was created back here, July 22nd, I think this is, just to give you an idea, the market comes back to check retail. And that's the beauty of the auction. It's from July 20th through July 27th is this. This was the retail price based on this auction. We checked it. So I hope you can kind of see there's order. What seems to be disorder is order. Any questions on the higher time frame? Now by the way, I have no idea. So you think there, is it going to get here now, ever, never? Does it come back here? That part I have no clue. But I do know this is an eventful day, this one. And I know yesterday was kind of a shot, at maybe, and I don't know, come back in and squeeze. That's because I always am thinking, where's the stops? So maybe we can get up and come down. But there was some interday activity, which I also will go into today to show you kind of how this developed in a couple of trades that, based on what we discussed in the Trader Lab, and they're never recommendations, are understanding of the auction and ways you might have participated. If there's any further questions, throw them in. I'll do my best to answer them. If you need technical support, just reach out to support@bookmap.com, and I, will try to do my best to get you what you're looking for. And remember, this is market mechanics. It's for educational purposes only. All we got to do now is find Bookmap, and we'll be good to go. Okay. So I want to show you this morning. So I got to get back to RTH Open, wherever that went, 8:30 Central Time. Let me find it. Because there was the first opportunity, in my opinion, was right off the open. Pretty close. And I want to show you how it manifests itself. Now, this was posted in the Trader Lab. Again, I don't call trades. The idea of the Trader Lab is to help you see behavior. And when you see a process that tends to unfold in a somewhat consistent basis, I think that's how setups get created. And everybody does their own thing. And there are examples of these available to anyone. All you need to do is come to the Trader Lab. There's about 60 PDFs of behaviors that you might be interested in that may give you something to think about, Because it isn't what any individual does. It's really what you can mentally get your head around. And if you understand how the market works, or at least the auction, if you accept that the market is an auction and not random. What is random is how it might get anywhere. That we don't know. In fact, we don't really know anything. But what we do know is the possibilities, right? So let's take a look here. Now, when the market opens, right, we don't know. It's like, I don't know. So, but we know a couple of things. So the market opens. The volume point of control is here. Now, this is called the volume point of control, and all this is early volume. In other words, the market opens, volume comes in. And this tracks where the highest volume is as the developing time frame. They call it developing because it's evolving or developing. So this is showing us the behavior and the volume. And this is called the chart volume profile. This is the full day, the session volume profile. And don't let this, if you haven't seen this before, don't let it bother you. It's just volume. And the volume profile is the horizontal representation of volume. We also can see this in these dots. These dots that you see on the screen represent delta. So all it is who's the aggressor in this volume. And if it's green, it means the buyers are lifting. They were aggressive here. All right. And this is our stop indicator. This is icebergs. You can see the little iceberg thing, But this is the stops. And for me, it's very important to observe retail trader behavior. And to me, most of us who are retail traders are using stops, and we use tight stops because we don't have a deep pocket. So let's take a look here. Market opens, developing volume point of control. You see the volume, the interaction, buyers and sellers, and you see it moving higher. So this is saying north at the moment, and this is in a microstructure. 12 stops go off, 31. Now we make a new high, and again, I don't know. Remember, I'm not saying I know anything. I'm watching the development. That's all I got at the moment. 7 stops go off. 7 stops, 31 and 7. Now, indicator 101, divergence, right? Now, this is not an indicator. This is just MBO data, which is disseminated by the Chicago Mercantile Exchange, CME, tags the orders. So we can see, were they icebergs? Was there was iceberg selling. Well, these are buy stops. And as you guys know, a stop becomes a market order. So we can see them. But when the market moves higher and we see less buying, so these are market orders, and no buying above it, right? That's divergence 101. Is everybody tracking? Okay. So this turns out to be the high of the day. And remember, nobody knows. So don't worry about that part. Who knows, right? I don't know. So now this is the overnight volume point of control. What this is saying, so you know what it is this was the retail price in the ETH. In other words, where the highest volume took place for the ETH session. So this is retail, right? So here we are. We go up. All right. Here's this exhaustion that we're talking about. Now, it changes, it aggregates depending, but what the beauty of this is I can zoom out and get to see the minutia. And that also shows me the volume right here, whatever's on the screen. That's why it's chart volume profile. So I can isolate this and I can see this volume. Now, since I'm kind of in the auction thing, what the volume is telling me is, remember, retail? And this is in micro. So I'm in the microstructure, retail, exhaustion. Again, I have no clue. Open was there. So let's watch the behavior. And this is where I'm looking for a short. So I'm watching. Again, I don't know. I'm going, okay. Now this is important. And I'm supposed to mark it. And of course I didn't do it here. So I have more than one bookmap rolling here. So it gets a little chaotic, especially on the open because they're marking a lot of levels. Let me just put this in. So I call these variable high volume nodes. And all I do is I'm tracking the volume migration. And I call this VPOC migration. In other words, you see it? It's migrating. And it's very sensitive because the volume is just starting up. This resets at RTH open, which is 8:30 Central Time. So I'm trying to get everybody aligned here so you know. Okay? So VPOC moves up here. That's represented by this high volume right here. See it? This is retail. This is an auction. And it's the buyers and sellers going, what about this? No. How about up here? So the volume is moving up, right? So the volume point of control is moving up with the volume. Then we have a change in behavior. Now I want you to see it. We break away from here, break below. This now is your micro high volume right here, which I had marked. This is currently the high, which we don't know, right? Is it the high? And we break below. So that sets up a potential short. Pullback. This is your over-under, this high volume up here. I'm just showing you what we discussed in the Trader Lab. And there's a couple more opportunities. Let me just show you. But let me just show you this. Okay. So think of it like this. You're the shopper. The shoppers are the buyers and the sellers. Remember, if it's too high, you're not going to pay it. This was retail in the microstructure. Now, these are not actionable. They are informative. And that's I want you to differentiate that, okay? Because this is how I'm watching the development. So here, so retail, break below, test here, test there. These are retail prices. So too low, too high, marked it, break below. This is an over-under right here. I have this. Now this is minutia, not actionable. Minutia, unless you understand it and you're very sensitive to what's going on. But let's just watch it. Too high, break below, too high, too high. See it? Very nuanced. Watch. Too high, potential shorts. Watch. Don't worry about it. Watch. Watch. Too high, overnight VPOC, retail for the ETH. Below it, pull back, retail, 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 retail. You're a shopper. What are the shoppers telling us? In the auction, they're saying too high, too high. Oop, come on. little rusty here, can't use a mouse. Break, it moves down. So too high, too high. So this is too high. Break, too high, break. Watch. This is auction. So once you can understand what it says, I think you have an advantage. Too high, too high, too high, too high, test, too high. See it? Too high, back to the open. Too high, too high. Overnight low, naked volume point of control. By the way, this was an artifact left behind. And this is the retail price from a day that was left behind. So this has meaning. At one point, the market said, yeah, this is, we accept this price, and now we're coming down. And it's the same concept, but this is left behind from a from a daily time frame. So it has a higher time frame component to it. These are intraday developing components, but the behavior's the same. Price check. Okay, price check. So let's watch, and we'll get you caught up. Try to get into real time. Now, remember 40.15 coming down, important. We took it out, and yesterday's low was aligned with it. Coincidence? Not to me. Now, once we get through it, VPOC migration, all this volume now, the maximum volume now is here. And it is saying we're going potentially lower. Notice the migration. This is telling me that this is potential acceptance. Okay? Now there's more. 4000, you notice this right here? This is sitting in the book. And you'll notice we get a reaction off it. So right here, I'm looking at this and I'm going, that's an interesting place maybe to get out of Dodge, right? So, but this is still going down. Let's look at the behavior. Watch. VPOC drops down. Break off of this, back to it. Price check. Is it still too expensive? Yes. Now we have a statistic. I want to show you this one. This is called the initial balance. The initial balance is the first hour high or low, RTH. It has over 90% probability that either the initial balance high or low, in other words, first hour RTH high or low, will get taken out during the RTH session. Of course, we don't know which one, but I'd say today we can kind of guess. And that's set, first hour is 9:30, my time. So that would be here. That's the initial balance low. Back here, potential short if it's part of your trade plan. And then you have this. And since you have over a 90% statistic, it's reasonable to think that it might go lower. Okay? This sets up the next target here. Then this is the naked volume point of control. So let's see what we do. Now there is another short over here. If you have it in your trade plan, this one I don't think I didn't mention in the Trader Lab. This is your target here. So I think I've covered the lay of the land. And then I want to talk to you about changes in context. But before I do, I'm going to look at the questions. I haven't been able to, and it takes me a little time to look at the questions. So thanks for your patience, and there is a 15-second delay. And by the way, if you have questions on stocks or options, I'm not really someone who can give you good input on that, or option strategies, but there are in Bookmap specific webinars on those products. One thing that is important is that all trading is based on the interaction of buyers and sellers. In other words, it's an auction. So these price points and this behavior is generic to all markets. Now, I can say if you're in option strategies, Qs, SPYs, whatever, or individual stocks, they behave the same. So this process applies. Now, if you're, let's just say, and this is not a recommendation, I don't trade those products now. If you're trading Qs, you might be operating in an intermediate time frame. In other words, you might be operating in these higher time frames, these micro composite time frames for larger swings, or you're just day trading futures and using the intermediate structures and then aligning inside with more micro structures. It's all a function of your time frame and your fractal. So all of this is generic. So if you can understand the auction, I think you've got something over the rest of the crowd who does not, because they don't trade with the auction. All right, so the next area, where are the stops? Now, I always think about where by the way, I have to label this here. I'm slacking off here. So where do you guys think stops are in this market? Anybody have an idea? What do you think? Think like a retail trader, don't act like one. Where would the stops be, do you think? Perhaps, maybe, maybe, right? Maybe. Anybody? Right. The stops are sitting, think about retail traders. Where do they put their stops? Above here, above the VWAP, and above the mid. Now, when we hit this target, and again, there's no precision in trading. To me, this is a random event with structure. So yeah, what's random is if we will get there, when we will get there, how. Other than that, it's orderly, right? So this auction is orderly. The fact we got here is part of the auction. And we might have made the low for the day, or we might not. That's not my job. My job is to try to look at structure, get aligned with it. Now, I want to talk to you about structure, because once we got down here, you'll notice the behavior changed. Counter rotation. But let's look over here now. This, once, and now the volume point of control is here. This is important. Again, this is saying fair price here at the moment, retail, right? Up here, unfair. So down here. Now, here's what is happening. This changes the context. You'll notice that we've been moving like a bullet train. I guess we can agree, other than some pauses and consolidations, the market's going lower, right? We all agree. Down, 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 down. Long, not part of the deal. At least not for me. You got to follow your own trade plan. I'm not, my goal is to get in alignment with the higher time frame. But also never forget that retail trader behavior is somewhat consistent and, unfortunately, statistically not so successful. Write that down, by the way. Think like a retail trader. Don't act like one. If you have a statistic, and remember, statistics are important, and all statistics are just probabilities. They're nothing more than that. And, there are times when you can get, if something has a 90% probability, 10% of the time it's not going to work. And you're going to go, yeah, Tom, you're brilliant. But I'm going to say, sometimes that 10% can show up more than once. It can show up twice in a row, 3 times in a row. And it does happen. That's the thing with statistics. So statistically, the odds of getting here, no idea. So, but this one is pretty good. And given the context, over a 90% probability, past performance not indicative of future results. This, and now where are the stops? If we take this one out, and now fair is here, think about it. Too low, oh, it's on sale. Price check in the big aisle. This is like going to those big stores, the giant stores, that have huge volume. Walmart, Sam's Clubs, Costco here in the States, just those big box stores, the big ones. All right. So this is a higher time frame, retail. So now where are the stops? Here, the initial balance low, mid VWAP. So now we're looking for what? A change in the context. Outside in. This is called mean reversion. We're no longer directional. We are now going into what's called balance. That means the market has run out of sellers at the moment, and now, since this is our retail price, too high, too low, too high, too low. So now we're going, all right, and now the market's doing business, and for the time being, this is where the retail price is, okay? And you'll see that it started moving back up a little bit. I call this VPOC migration. Write that down. What this is saying at the moment, that this right here might be too low. So we need to mark it. We're going to call it a variable high volume node, a VHVN. That means it's a previous location of where the highest volume is, and we want to keep that in mind. And now write this down. VPOC migration. What does it mean, and how might you react when you see it? I'm going to give you what I think. And again, past performance not indicative of future results because everything's random. So if this is suggesting too high, and now we move the opposite direction, is it saying maybe this is too low? If I'm in a short mode mentally and I just want to sell, and I see this, what does that say about my idea of getting short? Does that say maybe caution Will Robinson, warning Will Robinson, pressure? Think of it as volume pressure. Where are the stops? Out here on the outside edge. So what do we have? Mid IB VWAP. So this becomes an area that I think is very vulnerable to the potential squeezeteria. Why? Buy stops. So I have to be super cautious, and for me, I don't get involved here. Again, not a recommendation, because if I do get involved, I have to remember where the stops are. 4000 up above here, up above the VWAP. Now, it's not that I can't dance in here. I can. But I have to not forget. So 40 was important coming down. Let me show you. This is where you'd be going, by the way, if you got a short. Back to retail. Too high. Potentially back here. And then potentially here. So this, to me, while you might have a plan for this is called mean reversion, by the way. I meant the point of me telling you about this is the change in the behavior to balance is outside in. So the outside in is, remember, too high, too low, right? The shopper, too high, too low. Ooh, retail. See? Too high, didn't get back there. Warning Will Robinson. Plus shifting up. Warning Will Robinson. See? So this is putting this on the table. If you're a short-term trader, this is viable here to here. Remember, you're a shopper and you're going, this is retail. I'm not going to pay that with alignment. See the book? See the exhaustion? See the behavior? Let me open it up. I'm going to show you microstructure. I just want you to see how this works. Once you understand what it says, and this is speaking, it's a language, you can interpret. Now, I'm not suggesting you trigger. You got to understand it before you can do anything with it, right? Does this look familiar? Up, exhaustion, divergence 101. 4000 was big liquidity coming down. It's in the book. Isn't that interesting? Now, let me take you into the structure again. I got to open it up for you. I hope you're getting something out of this. Because if you can understand how to read the language, I think you are way ahead of the pack. Because most retail traders are in the indicator business. They don't understand how the market works. They think it's plug and play. Unfortunately, not so much in my humble opinion. Otherwise, we'd just get that old indicator out, we'd plug a few in, and we'd go down the basement to collect from the ATM, right? If you think it's that simple, I'm going to suggest that you rethink that. Trading doesn't have to be complicated, but it's not plug and play. So remember, stops are up here, outside edge of the consolidation, mean reversion is coming back. So let's look. Let me see if I can open this up and show you the minutia. I just want you to see it. Because remember what we said, what is an auction, right? Too high, too low. And we don't know where, but we have some indications here and here. So this is alignment. Risky because of this. And that's okay. We take risk all the time, right? Right here. Chop, chop. You see no buyer up here. Exhaustion. Exhaustion, exhaustion, location, vulnerable. Here's your entry right here. See this? This here is retail. Chop, 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 right? Too low, too high, too low. Break away. This is a breakout of a micro consolidation. And I'm not saying this is something you should do. I want you to understand what this represents. This is no different than this whole chop chop, except it's in a microstructure, and Bookmap is allowing us to see where the order flow was. We know it was important coming down. And the key is not that you can do anything with this. This is the tip-off, the break. At location, not in the middle of anywhere. And the pullback, you remember with the VHVNs, how I was showing you the pullbacks? This is the same thing, except it's in microstructure. In there is retail. This is like your little convenience store. Low volume, not much, not a lot of customers. They have a retail price too. They have a price where they raise the price and you're going, there's no chance I'm going to pay that much for a pint of ice cream 10 o'clock on a Saturday night. And then there's the low price. But it breaks away and pulls back to it. Potential short. Where to? Remember, I was saying, here. So let's see, what does it do? Pretty close. So what this is saying here is too high in this microstructure. There's a high volume area right there. Break, test into the next higher time frame, which is this is retail, right? Down here to test. Got close. And where's the stops? Let's remember. Here, right? Can you kind of see? So write down. Think like a retail trader. Don't act like one. Where's their stops? Here. So now we want to watch. And these are not trade recommendations. We're in real time now. If you have any questions, now's a good time to throw them out there. Where's the next layer of stops? The mid. And what's key up here? 40.15. So what did we do? Remember I said VPOC migration, warning Will Robinson? Can you see the pieces and how it speaks? Is this making some sense? I'm going to take a look at your question. Sorry about that. Yeah, I'm sorry. You know, guys, I just review the ES in here. I don't do Bitcoin or NQ. I stick with one market just so we have continuity, yeah, especially with these levels. But the behavior in the auction is the same. I mean, I use the same process on NQ when I trade NQ. But in here, since there's all different experience levels, I think ES is the most generic product, and from a volatility point of view, from a risk management, and again, past performance not indicative of future results. It's because of its depth. It's good, and it's rotational, so there's a lot of opportunity in it. But you can take this and apply it, this process of understanding market behavior, and apply it to anything. So this is retail trader behavior, and that's what we use in the Trader Lab, is think like a retail trader, don't act like one. 569 stops. Thanks for playing. Outside edge. We're still looking for mean reversion. So let's see if we get it. And here's the thing with context, and this is so important. This move from the low down here is not the same behavior. Once we come off a target, we go into something called balance, which is mean reversion. And that is a different trade plan, in my opinion. At least that's the way I operate. Because this is not the same as the bullet train, right? If you're trading this like the bullet train, you may have, I think, a challenge. Instead, it's a different plan. Outside in. Outside in. Mean reversion. Too high, I'm not paying that. And where was the squeeze? Where did we say? Retail trader behavior, VWAP, IB, right? Short. To where? Here. That's this trade. This is a different context. Remember context, right? Can you guys see the difference in the behavior from what we had earlier and then after we hit this, how it changed, how the VPOC, and this is another hint, VPOC migration, you guys wrote it down, right? Did you notice when we tested back down, where did we go? Here, here, too low, too low, too low, too low, shift, pressure, warning, Will Robinson, right? Here was the warning, check, check. Opposite behavior from what we had before, right? Rotation, back to the 40, bang. Stops, which is warning, Will Robinson, back. Different context. Can you guys see the difference in the context? Yeah, Simon, I hope I answered your question about why I just stick with the ES. It's really, price, this is very clear to me. I mean, if you read the auction, I think this is extremely clear. Uh, Not saying it's right, wrong, or anything, but this is not disorganized to me. This is extremely organized behavior from an auction perspective. And if you can, and I mean all traders, if you can kind of get the idea what's going on, I think you can potentially better navigate it if you have a plan for it. And these are different plans. In other words, I have no idea that this was on the hit parade today. I thought it was eventually on the hit parade, but eventually has no, there's no calendar when it comes to the market. Remember, the function of the market is to find a retail price. If at this time, and this is subject to change always because it's a market, this is too low. If this is too low and I have VPOC migration suggesting at the moment this is too low, so I hit a higher time frame VPOC, intermediate in the developing daily time frame, this is too low, we can still do anything. This is the outside edge, mean reversion. Separate trade plan, guys. What it is what I try to do, and for me, and again, it's just me, and it's not anything more than the way I think, is there's no long for me. There would be covering for me if I was into this. It's just another target, all right? And I wasn't. I was long gone, which doesn't matter. I just follow a trade plan. I don't have any, I should have, would have. If you're having regrets over something, the only regret, in my opinion, you should have ever in trading is not following your trade plan. I hear traders often saying, gee, I shoulda. Well, no, you should just shoulda follow your plan. That's the only shoulda you got. Shoulda let the runner go. Shoulda this and that is a part of your subconscious, or your fight or flight and FOMO mechanism is triggered and you're not recognizing it. I think it's more important to recognize those psychological triggers and the self-talk. And if it's destructive self-talk, you got to, as they say, put a leash on it. Anyway, I hope that's useful. So if you're having that mental process going, that doesn't belong in trading. That is, think about that outside. If that's how you think, whoever you are, and we all have those thoughts. I'm not saying none of us are unique here. Nobody is, we're all the same in the sense of our triggerings, emotionally and psychologically. It's when you recognize the destructiveness of that behavior in trading, now you got to deal with it. Because otherwise you're feeding FOMO and you'll become impulsive and you'll go through all kinds of stuff because you'll get those triggers. Still, I get them. Why didn't I have another runner on? Why didn't I have one on to get down to this target down here? Why not? It's not in my trade plan. It is in my trade plan, but once the train left the station, I just have locations to interact, and then I have targets, and I have no idea. Depending on where we went into balance, if it would have happened higher up, I would have another, I'd just be trading towards it. I trade towards targets, but I have no clue. So I'm just telling you me. I'm sure there's others who are much better at it, but I don't know. So anyway, this is another short, and this is a target, and then punt. And then you manage to trade or you're all out. Does that make sense? I'm just looking at the questions if there aren't any, guys. So, I'm getting a question, do we look for a value area? I think you have to look at really the behavior. I don't get hung up on, a lot of us tend to look for certainty. Like here's a line, here's this, here's a Fibonacci number, something. I don't understand why. Because we're trying to overlay structures on a market that's job is not to look at a structure, it's to find a fair price. So the market goes as low as it needs to go to attract you, the buyer. Now the buyer can be somebody who's covering, right? We don't know who it is, or is it an initiator? We don't know. And for me, not so much. I can only be a seller because I want to be aligned. Now, I do know we hit a key level down below. So what kind of seller do I become? Well, I'm going to trade my plan because I know I don't know. If things get rolling and we take out the low of the day, I got to tell you, I'm putting on the flak jacket. But at the moment, this is my trade. There's nothing more back here. And then you could be done with it depending, on your number of contracts. And in the trade lab, we talk about a minimum of two. One to get risk neutral and the second one to go to the target. So this is our target. And then, because this is the mean in the mean reversion. That's the mean. That's the high volume. Then we can check this, which was too low. Price check in aisle 3 is what I call these. Remember, the supermarket. So right here was too low. We checked it here. We checked it here. We can stop here, come back, too low, or come back here and check this one again. So I have no idea, So for me, but this is the main target. So I trade targets because I trade auction, right? This is the auction outside. Oh, I'm not paying that, right? You're the shopper. This is retail. Well, we're in a market where the sellers are looking for the buyers. This is a squeeze. So now the weak hands are out. What can the market do? Continue, potentially, keeping in mind where the low of the day is and that it was significant. This is the next level that we left behind. Potential check here. And if it's still too low, reverse off of here, come back. Or continue. And I don't know what it'll do. That's the magic of trading. Like, I don't know. So, but here's what I know. Retail price, mean reversion, stops. I talked about that before it happened. I says, think like a retail trader, don't act like one. And if you didn't write that down, please write it down. It's an asset. If you accept the market as random, and by random, not in the auction, but in the rotations, like this. Why did we go up here? Why didn't we do it here? That's what I talk when I mention random. Why did we not touch this but get close to it? You see? Why did we come up here, which we know is stops, and then why do we get it this time? You see? Those are the things. And that's where when I mention randomness. Besides, the whole thing is random. So, how it gets there, does it get there? No clue. And I really think it's important to be in a flexible mode where you accept that you don't know. See, the only thing, in my opinion, you should need to know is your trade plan and that you have a vetted process to interact with the market. What happens after that happens. That's just the way it works, So let's watch this level here. Right? And again, no precision. This is like horseshoes and hand grenades. There is no precision in the market. And one of the reasons there's no precision is because the stops, the momentum that's created like in something like this, you see. So anyway, this is our level here to be watching. If this is still too low, then back here, and then we hang out in here. So for me, other than what we spoke about earlier, and this, and potentially that one, but remember when we talked about this one, there was a caveat. What was sitting up here, right? So that's why you need to think like a retail trader, not act like one. And if you are going to act when you know this is above you, you got to be conscious of it. I always look and think, what is the retail trader behavior? And this is what mean reversion is, outside in. Okay, this is the high volume. This is retail. If that's too high, and we think it might be, back to retail, price check. And then where? Here, which was too low, but it might check. Pretty close, Remember, no precision. So that's it for this. So that was that. I hope it made sense. It's not what, and to me this is workable. I can handle this. That's 10 points, right? What do you guys think? JCH has asked me if these naked volume point of control, these are artifacts left behind from days that we had left behind last time we were up here, and they were the retail price and fair price for those days, and then we took off to the upside, and those were too low. Well, now the auction has determined that they're too high. Or I'm sorry, not low enough. And we went just to a higher time frame. So I take these off. These are toast. They're done, right? But this is all in this range though. So, but this is what's important. This is one of those, but in the next higher time frame. So the behavior is generic. When I point out a little microstructure, chop, and it breaks and it checks it in something that's a couple ticks, it's the same process as what you're seeing here in the intermediate time frame. That is, in my opinion, the beauty of the auction. Because once you understand the purpose of the market, why it does what it does, and you can kind of figure out why. We don't always know. In fact, we never know what it will do. But if we can understand what it might do and what its purpose is, I think we have a real advantage. Now, how you integrate your trade plan, how you interact with the market, what your triggers are, your risk management and all that, that's all up to you and your trade plan. In the Trader Lab, we discuss things like this. I've got over 60 PDFs posted in there of different ideas of how to navigate the market, behaviorals, and then an introductory video is pinned in the Trader Lab also. On kind of an overview of auction market theory and the mechanics of understanding how the market behaves as it develops during the day and how all these pieces integrate and fit together. Might be useful. If you have any interest in that, and by the way, the Trader Lab is a group of traders. It's and we do discuss auction market theory and how to use the volume profile, etc. By the way, those of you who are watching the stream on TB2, are you getting any little things jumping up and down over the screen right now? Little strange little things jumping up and down? You are? What the heck is that? Anybody know what that is? That's pretty wild. I got to figure out what that is, guys. I've never seen that before. Wow. Oh, it's really nice. Yeah, let's do that. I for me on the stop losses, Ryer, it's structural. I got to put you guys on hold for a minute. I got to see if I can do something about that nonsense that's going on in Discord. Hold on a second. Yeah, I'm sorry about that, guys. I'm back. Okay, yeah, I don't know what's going on. It's on TB2, and there's this nonsense going on there. All these little emojis or whatever they are jumping up and down. So wonderful. Back to the VHVN. Okay, so now we want to see the behavior here. And now we got to watch this. But this is your outside in trade, mean reversion. So guys, this is called balance. And you can kind of see what it is. It's a consolidation. And what we did, and write this down, you got to look to the left. Where are the stops? Above this swing. Where do we go? Above the VWAP. Took the stops out. Thanks for playing. We have parting gifts for you in the play at home game. So now we want to watch. So this was a short, right? So here's how this works. You get your short, you get a scale if that's your trade plan. This is your target. Or you take a short, you take a scale ahead of this. Feel lucky, as Dirty Harry would say, and then you hold a runner down towards the low or ahead of it. This is your obstacle here, and we're below it. Is everybody tracking? And the other part about the mean reversion that I was mentioning to you guys, shorts only for me today. Now I know there's counter trend traders, and my hat goes off to them because they help for me, because I need them to create the squeeze. But that sets me up to get back in alignment. So I try to keep it simple. You know, I'm not someone who says, yeah, I want to get this little rotation and that. If you think that's trading, I think you might be a little disappointed, at least, and again, it's only my opinion. To me, trading is trying to get aligned with the higher time frame. Who's advancing, who is withdrawing, who's retreating. I would suspect the buyers are retreating, wouldn't you? Would you suspect that the sellers are taking advantage of counter rotations? If you think that might be what's going on, then would you be a seller or would you want to be a buyer? What do you think? Seller. I'm with you. I want to be a seller. Rare, the IBF is, I call it the IB failure. And it's specifically a mean reversion setup where we have what's called range extension. In other words, we take out the first hour low and then we come back in above the initial balance, which, wherever that was, lost it. It must be under here someplace. I think it was here. I don't know, but it's somewhere around here. Let me look. Yeah, around 40 even, you know. So it's right under here. This was the first hour. And what it is the market comes back inside and then reverts back. But there's a little problem with that because it's not qualified in this context. Context is down. Now the IB and taking the stops out is to get realigned for mean reversion. VPOC is below us. That means this is the fair price. So if I come to an outside edge, remember retail, where's too high? Well, if I get buy stops out, because we know they're sitting above the VWAP and this liquidity, potentially, and, you know, in this area, if we can squeeze them and there's no follow through, then it's mean reversion back here. So the IBF is contextual. It is not mechanical. So when I know the stops are above the IB, but the VPOC is below, it becomes stop pick or squeeze reversion. So this is what context is about, guys. And when we talk about context and how confusing it can be, it's about alignment. So for me, and it's just my plan, I can't get long at all. I can only get short until something changes. And you guys tell me, what has changed? Anything? Rare, I don't use the composites from the micro composites. I'm really more about retail. So, and they're only 70%. You know, the whole thing about a quote value area, it's just a statistical, you know, it's sort of like it's a 70%-ish of the volume in any fractal. So I don't use them. But I use them only in relation to the previous day. So let's just say we open inside the previous day's range and value, which means nothing has changed, then I anticipate two-sided trade early. Other than that, I don't use them because I'm more interested in what I'm seeing right here, because as this day develops, it's giving me information. The auction is telling me too high, too low. Fair. And look where we are. Now there's no precision in this, so don't get carried away. So this was our next area to check, and all we did was get below here. You know, stops are under here. Stops are under here for the longs. So this is, for me, is only selling today. And it doesn't matter. Now, if it reverses and all of a sudden it's a new day, the Federal Reserve says money for everybody, let's get the 5 helicopters going. Get your laundry basket out, the cash, catch the cash. Other than that, it's south of the border in my trade plan. With the caveats of we hit this. Now we take it out, then game on. But for me, the game right now is outside in. It's nothing. That's all there is. Now, if it changes, it puts it down here on the map. But whether or not that's going to happen, I have no idea. We can come down here, check it, come back. We can come down here, check it, pull back, and keep going. See, that part I don't know, but I don't think anybody knows that. In fact, nobody knows it because it's all random. But since I hit my target, my viewpoint at the moment is just rotation, balance, mean reversion. Can you guys get a sense, and I'm asking this question for everybody, what the difference is in the context? and how you might overlay the context, which is mean reversion, which is balance, inside of a directional move. Can you see how these fractal pieces overlay each other? Does that make sense? Michael, I don't use TPOs anymore. I mean, I did forever. But once volume just to me is a more accurate viewpoint. But you can. I mean, there's nothing saying you can't. And I mean, I just do it my thing. But I find the volume, since I use it in the microstructures for triggering, it's much more relevant to me to see the retail behavior. So I can see it in the volume and with the stop and iceberg indicator. And for me, the stops help me see inside. It, and that's all volume based. So it's more meaningful for me. Personal preference. There's no one way. The thing I get asked a lot, there's no one way to do this. I think there's just a way that you can wrap your head around that makes sense to you, however you interpret it. But I suggest it's not an indicator thing. It's really more behavioral. What's the market trying to do? I mean, what's the purpose of the market? Remember, buyers and sellers. What's too low? Let's get a buyer. And a buyer in this case can be a short covering. Remember that. It's not somebody who says, gee, I want to buy the market here. I think it's wonderful. Why would you want to buy the market? So for me, in the downtrend, and if you guys haven't noticed, we are in a downtrend. If we're in a downtrend, then there's no reason to be a buyer. There's only selling until it might change. Now that's me. If we have counter trend traders, then that's up to you. I can't operate like that, and let me tell you why. Unless I'm in a different market context where I'm really going to trade two sides, which I do, in this context I only have short. Because who's withdrawing? Who's the army in retreat? It's the buyers. So counter rotations, which are squeezes and stops and whatever else, once that's exhausted, I want to get back on the train and I want to join the army that's advancing. These guys are thrown under the bus. Hey, Louis, make a counterattack. The rest of us are going to get out of here. Okay. And these sellers, the longs that are still in the market, from wherever, they're going to use counter rotations to do what? To get out. So they become sellers. Does that make sense? Why would I want to join the buyers when I know the sellers are going, please let me out until it changes? Does that make sense? Rare, the previous day is asking me about value errors. Yeah, it's where it opens for me relative to the RTH and also the ETH of, the most current auction is ETH prior to this, like today's RTH open. And then where are we relative to the previous RTH? Where do we open? And then that tells me, has something changed? So that's pretty much how that works, And today, the selling really kicked off real early. You saw it. It just had nothing. And that's where our first short started. Not because we're clairvoyant, because nobody knows. It's because of the auction and what it said with those VPOC migrations, the return, the test. And it's doing this on all time frames, you say. So let's watch how we do down here. This is real interesting, isn't it? So this was your short. Target, and either you're holding or you're out. It's simple. And in the Trader Lab, I only discuss two lots because if you create a foundation, then you go from there. Without a foundation, you don't need more setups. You need one that you can explain. What I've always figured is the best way to kind of check yourself in the sense of, do you really know or are you just gambling and guessing, is to be able to explain why. Can you explain why? If you can't, then you don't have a trade plan because you can't define it. So why is really important. Boy, those emoji things are jumping all over. Whoever came up with that idea, I got news for you. I'd like to take them out behind the garage and have a conversation, if you know what I mean, in the most polite way. 46, I can't give you examples now. I don't have one. But I do, in the stream when those conditions exist, we talk about them, right? And there's probably some videos that I've got up on YouTube that you guys might be interested in. Trend day configuration, a balanced day configuration. It's called Inside Day. They're from a couple weeks ago. Trend breakout, I think, and then a multiple time frame video. Those three could give everybody a pretty good idea of what's what. They're fairly detailed. And especially a trend day configuration. How do you operate in a trend configuration? This is an example of a trend configuration, which is continuation trades when it shifts out of directional to mean reversion. It's a different context. So I have in my plan, basically, when I recognize the change in behavior, and that was here, right here, then I'm on guard, for this. And again, I don't know, could have done it here. I don't know, right? So I don't know. There to there. Mean reversion. And the reason is we hit a target. We came all the way up. Isn't this a change in behavior? Down, 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 down. Up. Where's the stops? Here. Where's the VPOC? Here. That's what mean reversion is. Back. And now we got our stops, which is what we were looking for. Now, continuation. What I find is you want these guys out. If they can get taken out with no buying above, then it's just a squeeze, and that gives you your opportunity for mean reversion. That's the context. And that's the difference when it changes from jump out the window to this kind of rotation. So when I get this, now I'm looking for outside in. Not complicated, guys. You just have to recognize the change in behavior. Indicators, what are they going to be telling you here? What? I don't know. Sell here, sell there, sell there. What? Sell there. Which one? Sell here, sell here, sell here, sell here, sell here. Which one? If you understood the context, you might be waiting for this. Or not waiting for a crossover, but waiting for the behavior to get short right here. Right here. Short. Indicator cross, I don't know where. Hindsight, it's always clear. But what about this one? What about this one? You see. So, and this one we talked about right here. Right? But this is the key. So I'm just pointing it out. Okay? This, no idea. This to this, yes. Then to here. Retail, too low. Got below it. Shocking, isn't it? No idea. Random. So now you got to see. But that's what this trade is. This trade, mean reversion, is outside back to the mean, which is that, and then potentially around to the other side. This is where, oh, it's on sale for those time frame traders. I'm not paying that. Retail. So now we're in a rotation. Now it can change. We can fall out of this and, go south. But do you see the difference in the behavior? Outside, outside. Now I have no idea what will happen on this side, right? I mean, nobody knows. At least nobody's called me up and said, hey, Tom. But I do know this side because of the trend being down, mean, and then outside to somewhere. And I have no idea. I don't think about it. It's not my job. I can't predict. I can anticipate. So I anticipate. And what setups are, in my opinion, are anticipations of potential. Isn't that what a setup is? And isn't it like, well, it might do this. If it does, then what? I know before it gets here what I'm going to do. That's what a trade plan is. If you don't have one, if you're impulsing and making it up, that's not going to work out probably. If I know retail trader behavior, and remember to write that down, think like one, where are their stops? Right at the IB high, which is right under the VWAP, and the VWAP. It's alignment, because they all act in mass. Do I want to get in front of them? This one is risky. Worked pretty good. The worst that would happen if you're following your trade plan is you would scratch it if you have running a 2-lot to get risk neutral, or you'd take a stop if you had if you didn't react to this coming up, knowing that the stops were above you, because we talked about it. That's up to you in your trade plan. My trade plan, this to this, and then punt, because I have no idea, down to here. And again, I don't know that, so I don't worry about that. But that's what this is, mean reversion. No long, because I can't get long. Is this logical? Can you kind of see the thought process of what the auction says? Hey, Joe, thanks for being here. Good luck with your flight. Any questions, guys? So you can see there's no longs for me. In other words, I want somebody else. I welcome somebody else getting along here. It can't be me. The only long I would have is to cover a short. So we could call that buying, right? But I don't quite see that the same way. I am responding versus initiating. This is initiative behavior because it's aligned with the trend. These counter rotations are responders. It's a different buyer. This is not a strong buyer as far as I can recognize. This is somebody who's in maybe a short time frame, and it's just a rotation. And in the SES, 5.6 point rotation is noise. I mean, that's just your average, rotations. This is just sort of the way this thing works. So, so now, another piece of the puzzle is how do you manage your trade? And everybody has to kind of come up with that solution, because it's really time frame based. And, and I can't get into that because it's how many contracts do you trade? One of the things about going up to higher time frames is you end up giving a lot of it back. If you're, let's just say, this never happened, and let's say we only got here, and you're short from here. Well, now what? What are you going to do with this? It can come right back here. See? So how do you manage that? Do you just trail somehow? Where? Do you let it come all the way back here? Give 8 points back? You see? I'm only asking the question because you need to have that answer. Or you accept the randomness and you just let it, but you have to have statistics to know where, that sweet spot is. Because the thing with rotations, they're random. So, I think the tendency is to try to create, curve fit something in, So how do you do that? And this is not a recommendation. Do you just trail stops behind consolidations? When they stop pick, do you move your stop down? When you get this and then you make a new low, do you put your stop here? And you get taken out as we mean revert back here. And then you leave this 80, 86, whatever, 88, 6, 7, 8 points on the table. What does that do to you mentally? You see? I don't throw a party and pop a champagne cork. I have teeth marks on the edge of my desk. So I have, that's something that is disturbing to me. So I operate a little differently. I prefer higher probability behaviors. So it's a matter of, again, your trade plan and what aligns with you mentally. I mean, there's guys in the trader lab that put a trade on and they go on vacation. I mean, I don't know how they do it, you know, and they're trading higher time frames, but they're using the same process. So guys, if you're, if you think all we're doing here is auction market theory in all fractals and time frames, using the same process to get into alignment. So we execute in for me, the shortest time frame I can isolate out, because that's how I establish, for me, again, personally, my risk is where a structure fails. I don't need to hang out with a fixed stop. If I can get away with a 2-3 point stop, I'm happy with that, because it's going to only be happen. It's only going to get taken if the structure I'm leaning on fails. But if I'm waiting patiently for behaviors and locations, is that a smart thing for me to do? Then to wait for the location and the stop pick, look for divergence, look for a triggering structure, and put my stop above it. Because if it just gives me the little head fake and takes me out, I'm okay with that. Because it may take me out and then fail from the next layer up, and then I just put the trade back on again. Like what if we had taken this one over here, right? Put it back out. Now it goes. Now to wherever, right? Where's your trade management? That's a different topic. But I hope you guys see the order. There's order. And I invite you to come to the Trader Lab if you're interested in this. It's basically a group of like-minded traders with diverse experiences, operate in different time frames, use different tools, even different products. But it's about auction market theory, volume profile, and how to participate in the intraday developing time frame, and in order to attempt to get it aligned with higher time frame rotations. So it's not scalping, it is integration, because in the end we all initiate our trades in the developing time frame. Any questions before we say hasta la vista? Lanny, the difference between initiative and responsive, just think of it what the terms are. Initiative behavior are those who are, quote, initiating or putting on, going more like with the trend. Responders are someone like this. If these guys are short, they're responding to this price, and that creates the buying, which gives you the counter rotation, and then the buy stops above here are actually the fuel. In other words, it kind of has its own momentum. And then we can come back here or not. Whatever it does, it does. That part, clueless. But we can see behavior here. You can see the book. See the behavior. Order flow is its own unique experience. Notice how the book is coming down. It's pressing here. Now they may pull. There's all kinds of nonsense that goes on with this, with the order flow. But let's look. See how this is moving down? That puts pressure. Now, if you're interested in order flow, Bruce does a special webinars, which are open to everybody, Monday, Tuesday, and Friday, specifically on order flow and using order flow tools. And he covers, he'll cover Bitcoin, stocks, options, ES or NQ, whatever, pick one. We haven't done pork bellies over there, but you never know with Bruce. And that would give you insight. And by the way, if you're interested in the Trader Lab, go to bookmap.com, and it says join Discord. And you would have access to all the free education, and there's things going on every day. Crypto, options, stocks, Qs, the rest of it. Guest traders, just a lot of stuff. And it's you don't have to be a Bookmap subscriber, and you won't be solicited. You don't, and this is open to everybody. So I would, suggest if you find any value in this, that you check it out anyway. Free PDFs, there's 60 of them on the structures that I'm discussing here, and these behaviors plus much more, and then a introductory video. It's pinned to the top of the Trader Lab text channel, and you can take a look at that. Thinking what else I might have for you. The other thing is I do narrate intraday for the in Discord for our Trader Lab members when there's something worth mentioning. But I think you get the idea of what's going on. This is about you guys. It's not about me. This is about you guys understanding there's method in madness. It appears like chaos. It's not. Sometimes it is chaotic because the market is, has an input that hasn't digested it and has to try to figure out what does this mean. So it auctions, but the market is continually in auction. I mean, take a look at what we did. Too high, too low, fair, different behavior. If you understand these behaviors, now nobody knows what the market will do, so don't think there's no, the magic 8 ball, don't have one that works anyway. But you can get an idea of what might happen, and then you can derive a plan specifically for the anticipated behavior. And the market pretty much doesn't have a lot of modes. It's either directional, range extension, or rotational, where it gets into an area and then there's a certain sense of calm where it rotates. So both sides are active. This is important right here. Watch this behavior. This becomes VHVN. We're going to mark it. This was the area that was too low before, you see? So now, and then it went up here, and now we're back here. So it's an auction. Remember, these levels can change. Now I'm going to mark it, variable high volume node. And remember, what is it telling me? Where the highest volume is in the developing daily time frame and what was retail. If now the volume is moving down, remember warning Will Robinson when it went the other way? Now it is suggesting potential continuation or not. Again, I don't know, right? So we don't worry about knowing. What we do is try to anticipate and observe. So this was too low, remember? It shifted up. That suggested pressure to the upside. Remember, I'm just bringing you back. Now what? This was too low. This might be too high. So now it's back here. VHVN. This is now the fair price. Unfair. Potential to push lower. Don't know where to. Not my job to know. Let's observe the behavior. I'll hang out here with you guys a while. I want you to see the speech, the dance. It's like music. The market is speaking. If you know how to interpret it, now it doesn't, like anything in trading, it's the best you got is maybe. I mean, we could come down here, come back here, right? We know that. So yes, that's what it can do. But the fact that this moved down does not give us some insight as to potential. All you got in trading is potential. So too low, migrating, potential to come back and check, or come back here. This is our outside edge of this distribution. See where the low volume is? Too low. Didn't stay down there. Came back up. Didn't get back here. That is a insight that the market and the participants are saying. They're saying is, too high. Well, this over here before was too low, right? Is this really too high, or are we going to come back and check it, right? It can do that. Stops are sitting here and here. You do remember, look left, write that down. Look left, where's the fuel? If we come up here, we're going probably here. If we can't get back here, we can't get over this, then we're going there. If this, then that. If not, then what? Write that down. If this, then that. If not, then what? If this shifts down and we don't get back, then what? South. If it shifts down, we pull back and we can't get lower, then what? Then back here. It's that or not. Maybe. Not a recommendation. Because you can narrate. At least that's how I think of the market. I just mentally have this thing about what's it telling me. Because the participants are the one who create the prices. Not you, not me. It's the participants. And they interact. Remember, a buyer and a seller. Buyer and a seller. There's a buyer and a seller at each of these price points. A buyer and a seller. We don't know why that person's buying. It might be somebody covering, right? Or somebody buying because they think this is undervalued and we're going to go, reverse. Why are they buying? I have no answer on that one. But I know what this means. So if you know what it means, and remember, subject to change all the time, because it's a narrative, it's a story. If we come back above here, remember, stops are here. Where does that bring us? Potentially back here. And again, I don't know. Let's watch. Any final questions? I know I've said that before, but hey, it's so interesting, I can't help myself. Moy, I don't know what 3987 is. I'm not using that micro composite. If you look at my chart, I'll give you the dates. 720 to 727 is the micro composite. 3969 is the retail price in that time frame. And it is here on my chart somewhere. There it is. There. So that's the target. Whoops. Let me fix that. I didn't, I haven't looked at this stuff in a while. So 3969. You're away from a week, things get a little out of whack. So observe where the liquidity is and observe where this is. You don't get back, you don't get back. But this is balance. See how we're coming back to retail? So we can stay in here. So for me, all I have is outside selling. I can't get involved for me on the long side, and you guys already know why. So that's all I got to do here.
Short midpoint reversal. Short midpoint reversal.
Hope you get something out of this. If you are interested in the Trader Lab, our senior trader has over 54 years of experience. It's a collaborative, really, so we all can try to get better. If you trade options or stocks, you're welcome. The conversation centers around the ES, but it's really because it's easier to stay focused, but it's all about the auction. So levels are levels. They exist in all markets. You'll see the same behavior in all markets. So it doesn't really matter. All you need is some liquidity in there. You got to have volume or else nothing works, right? I think palladium, I'm trying to remember the markets back in the Stone Age where there was nobody would trade it and it'd be sitting there. It's before they came out with electricity futures and whatever else, light bulbs. But back in the day, I just because I used to trade the metals complex fairly actively in the Stone Age, and palladium I was kind of interested. I was like, who trades this stuff? You have a stop display? A tappish, what do you mean? Okay. Oh, this? It's a kind of a running total. Like here, what it's showing me is this resets every minute. Basically, it's taking a 1 minute picture of the accumulated or aggregated sell stops in a 1 minute window. So it's showing me 648 stops going off, 88 buying iceberg. So this is the stops. You're seeing the same thing on the screen, but this is just doing in a kind of like the total 1 minute window. So within a minute, it's just moving that around. But you can see it here. I don't really use, when we first started with the stop iceberg detector, it wasn't on chart, it was just down here. And then it got added up here. I use this one primarily because I want to see that stop divergence, right? So, but this is still on here. I mean, I have this one set, not here, but if I get a big number accumulating, it gives me an alert because I don't need to see, 16 went off. I'm looking at my screen, and I'm looking at this like here, look at this. Let me open this up a little bit. So I have nothing to do here. There's nothing here for me. So, nothing. I mean, because it's not outside, it's just nowhere. So for me, I don't do anything with this. I'm not looking to try to make something out of nothing. I just doesn't matter to me. I think in trading, and it's a personal opinion, it's not about catching all these ripples. If you think that's trading, I think you're going to be very disappointed and probably not going to be doing it for very long. In my opinion, it's risk reward. Risk is your job, is to manage risk, job number one. And you need the outside, you need the range to make it pay. So if you're playing this kind of stuff, because for me, my risk, and this is not a valid thing, but let's just say my risk is the same here as it would be down here. It's the same. Why would I take a risk to do that when I could take a risk for this or some component? You see what I'm saying? So the thing with the trade plan is you have to define not only the context and how to operate with a vetted trade plan for those contexts, keeping in mind what do we got today? South of the border. Where to? Nobody knows. How far? Don't know. Is the low a day in? Don't know. Does it matter? No. What matters is alignment with the context. Then everything else can unfold from there. But if you're trying to be a buyer, picking the low, and raise your hand if you've ever tried to do that, I have news for you. Probably not the best way to interact with the market. I'd like somebody else to come up with the low of the day. Thank you. Now I have some structure to lean on if that was my plan for today, which it's not. But if it was, I want somebody else. Now right here, is this a long? Well, not for me. See? It's nothing. Are we going to get back here? We didn't. That would be a short for me. Break, didn't do it. Where do we come back? Are we going to come here? It shifts. Doesn't do it. Nothing to do. If it goes down 40 points, nothing to do. Why? Not in my trade plan. I just sit and wait. If I'm doing anything else, shame on me, because it's not in my trade plan. When it aligns, my job is to take the trade. If the quote setup doesn't show up, my job is to be a tourist and wait for my bus. That's the job. It may not be, if you think it's an action thing and you're looking for stimulus and, you're triggered and all this attachment to dollars and all this and how much you could make, it's not the way to think, in my opinion, at least not as a trader. Trading is a business. And you should approach it as a business. Losses are cost of production. If you're following a trade plan, just like a manufacturer or anybody who runs a business, they don't make it up as they go. They have a plan. They know what it costs to produce. They know what their net is over a sample size of jobs. Well, for us, it's trades. That's all it is, And we're trying to find an edge. Where is something out of whack where it might give us something to exploit? What do the participants say about the current value? Is the price too high, too low? What's it doing? Is it fair? Well, apparently, this is still too high. Now, where are we going to go? That part I don't know. If we take this out, it opens the door. The behavior in this area is going to be very important. We can come down, take it out, come back in. I mean, this is still retail. It can test it. No precision. Looks pretty precise. I don't see it that way. I always see it as maybe. Then we have to look below. I don't even know if I got my levels in down here. Looks like no. See? Let me just go look below. See what's down here. I'm looking at another chart. So it'll give me a second. Well, here's what's downstairs. Roughly 39.03.05, then 38.56-ish. So 39-ish, you know, 39.10 in there, you know, so 39-ish. Doesn't have to do it now, ever, never, doesn't matter. May not get there today, and again, that's not my job. My job is to wait for the trade, put it on, attempt to get risk neutral subject to my trade plan, and then punt. And punt means kick the ball, because I don't know, you know, and then manage the trade subject to my trade plan. So that's it. It's not more complicated than that, guys. Complexity obscures simplicity. And the simpler you can make this, I believe the better. And again, it's just my personal experience as someone who came from system design and complexity. I thought complexity was like trying to find the secret, you know. I'm going to find the right combination and nobody else will know it. I'll figure it out. Yeah. If you're tweaking and tuning, you're curve fitting. Not sustainable, in my opinion. Now, I'm not saying you can't develop a, quote, system, but that has to be, if it's a system, it's not discretionary. It has to be consistent. What happened to me in system design was the context change was the thing that became problematic. So, and I tried to create systems that would actually detect the context change and change to a different, you know, like, let's just say different behavior, different setups, and all this kind of stuff. And it was hugely problematic and unstable. And then when I was doing indicators, you kind of move in the same kind of directions. You know, you're trying to find a combination of indicators, combination of time frames, combination of tuning. You know, keep going and keep going. It's all the same. Indicators or systems are really derivative, in my opinion. So anyway, so I don't do any of that. I don't use any indicators because what is an indicator based on is price. Well, I can see the price right here on the screen. I don't need something to tell me the market's going down. I certainly don't need to look at the VIX to see that it's higher, right? So why do I need the tick or the trend? I used to watch all of that. What does that do for me? I got everything I need right here. And I think you will too. Because anything else that you bring in can create conflict, cloud, and create paralysis by analysis. For me, it's very simple. And if it doesn't align, you know, with the things I require as far as my trade plan goes, I don't have a trade. It doesn't matter, you know. If you're sitting here saying, gee, I should have sold this or I should have got in over here or whatever it is, that's not trading. It's not the shoulda. It's what's my job? My job is to have a vetted trade plan. My job is to execute it when the trade shows up. My job is also to stand by and not trade when it doesn't meet those parameters. That's how you measure yourself in this business. The bottom line shows up when you do what you're supposed to do when you're supposed to do it. Randomness is the enemy. If you perform in a random manner, you're gambling. So, and then gamblers should go to Vegas, see the show, get the buffet. So let's not be gamblers. Let's have trade plans. Let's vet them. Let's be disciplined. Let's understand that trading is a business. It is not a gambling environment. It is taking intelligent risk. And what it is understanding risk management, discipline, having a plan. If you don't have a plan, get one. If you don't know how to create a plan, come to the Trader Lab. There's a lot of support there by other traders like you who are in the same place or maybe further along or not as far along as you are. Take advantage of the free education that Bookmap offers. You can go to bookmap.com, join the Discord chat. You won't be solicited. You don't have to be a Bookmap subscriber. not required. And there's a lot of education that goes beyond what I do here. So I think education is good, and the worst that can happen is you walk away with something and maybe a little more knowledge that you might be able to apply to help you move along in your career. Thanks for being here, everybody. Appreciate your time. Trader Lab, I will be dropping in, to drop in a few words of, I don't know, observation. And I want to thank you all for being here. We're going to be back on our regular schedule, so it's going to be 11:30 to 1 Eastern Standard Time, and that's Monday through Friday. If you haven't watched the videos I have posted, and you are looking to understand context, there's one up there and these are recent, they're this month, they were posted. One says inside, trading the inside day, and inside is basically a two-sided trade, balanced, different behavior. Then there's trend configuration, the breakout that we had from that consolidation last week, what that means, how to interact with it. And then there's another one that just really goes into multiple time frames, how you integrate, and you're seeing it today really, how you integrate developing time frame and inside of higher time frames, because this is our higher time frame retail price and a consolidation, and how you use microstructures. It's all the same. If you take those three and you take a weekend, I'm going to leave them up for a little while longer. And your job, my recommendation is that you isolate the days, take notes, think about what are the pieces, what's going on, what do you see. I'm just looking at those little thumbs that just popped up in Discord on the TB2. I got a few words for Discord about that, so we'll see. Anyway, watch those. Create a trade plan. If you don't have a trade plan, guys, you're not. You got to have an accountability piece. You need to manage the emotional state. You need to write down and keep a journal as far as why you put a trade on. Go back and review them. If you're taking a lot of trades and you're not highly skilled, I'm going to ask you why. Does that mean you're impulsive? You're experiencing FOMO and you're being triggered by it? Or are you intentional? You sit, you're disciplined, you wait. You're like a hunter, you're waiting for your specific target. You are not interacting randomly. Very important. You can always add to a trade plan, but if you don't have one, there's nothing to add to, and you probably aren't going to be needing one because you might not be here. And I want everybody to be able to succeed. I'm not saying this is the answer, but I think it's an important piece. Because if you can understand market mechanics, why it does what it does, then you might be able to build some structure around it. That might give you a better opportunity, or maybe help you define an edge better, So here we are, we're back right here. This is very important. So you can kind of see, if we look at this whole thing,
Stocks go outside microstructure.
Bullet Express, right to the target, change in behavior, mean reversion, right? Outside in, stop squeeze, we were looking for that, outside in, and now continuation. Pullback, didn't quite get here. Shift, warning Will Robinson, too high, see the narration, and then punt, because who knows. Back here. Okay, now what? Don't know. Take it out, south. And remember, we can come here, go below it. If we come back above it, it sets up potential mean reversion again. Not a long potential rotation. If we can't get back above here, then I go and put the helmet on, and I go down to the basement, and I open up the storm cellar, and potentially go there. Let me see, make sure I got our targets back out. Um, and these are not recommendations, they're just structure. Around 3910, 3900 would be a potential target down here. Yeah, down in here. You know, well, get over here. Here. See? So like this is your higher time frame, retail price. That was fair last time we were here. If this becomes unfair, it puts this one on the table and this. So you can kind of see the logic, right? This is a retail price that was left behind in a developing daily time frame that was too low. We haven't come back to check it. This is in the next higher time frame, micro composite, which is the same as this. You see this, I think you can maybe see the logic, and all I'm doing is integrating time frames. This is developing time frame, so I'm tracking how this migrates and the behavior, which gives me insight. This is the current retail price in our developing time frame. There it is. There's all the volume. This was our higher time frame retail price, which is the low of the day. Coincidence, wink wink. And then if we fall out of here and don't get back inside, it puts this on the table, potentially, not a recommendation, at some point in the future. Again, no idea. And if we keep going, more fun. So I hope you, again, I know I was about to tune off, but with things happening, I wanted to stay with you guys into this test. Back to the low, back to the microcomposite VPOC, and again, not a recommendation. Past performance not indicative of future results. Wear a helmet. Any questions? Yeah, guys, homework. You got to do homework. You need a trade plan. And don't allow yourself to get overwhelmed. Pick one condition. Now, I think the thing you see most of the time is mean reversion. Because these kind of directional moves are not, the regular, it's not everyday kind of deal. A lot of the time, I mean, we can be directional and then we go into, this kind of stuff, rotation. That's mean reversion. So you'll see this kind of thing more often in all time frames. The kind of bullet express that we've had is really more contextual to the current, situation. See the sequence: too high, too high, too high, too low, back to here, stop pick, short, too high, didn't get back, move down, too high, fair, outside edge. It's like music. Stops, buy stops, buy stops, buy stops. By the way, here's something I want to point out to you guys. Icebergs, 2400, 1800, 1200. Does that tell you something? Here, 2500. Is it this guy covering? What does it mean? So if you see icebergs, for me, I don't activate on them. Here's something for you. 2700 icebergs here. Let me ask you, why didn't the market reverse at this 2500, but it came off at this one? Is it because of the icebergs or because of this? What? This. Which one of those is more relevant, do you think? The auction or an iceberg? Which one do you think? I have a priority of input. I'm not saying it's right. I have no opinion. I just know I see this and I see it as potentially random. Here, here, here. Okay, but now what? What does this mean? Is this the low of the day? Or is it just because of this? I don't have an answer, But in my priority of inputs, the auction is the most important thing because the auction tells me what the participants perceived. Do we know what the agenda is of this iceberg or this group of icebergs? Are they buying because they think the price is a deal? Or are they covering because they were selling on the way down? I don't have that answer. So because I know I don't know, it's not important to me as far as how I navigate. And again, it's just a personal thing. It might be I don't understand icebergs, but I understand the auction. So as long as so it's a priority of inputs. So, and it's no different than you guys who look at a higher time frame and whatever, or 60-minute or 30-minute, how do you prioritize all this stuff? Well, this is my priority because I know what this represents. I know what this is. That's retail. I know the market thought it was too cheap last time we were here and we went away. It's logical to come back and check it. It's also logical that it might be still too low, and that's why we got the counter rotation, you see. Now what? Is it still too low? Do we come back to here, too low? Or do we fiddle around, build energy, and break out of here and come down to the next level? I don't have the answer. That's the question you need to be thinking about. And you may not have the answer, but you do have an idea, I think, of knowing where these locations are, why they mean something. Isn't why important? We don't know what it'll do, but we know why something exists, and then based on what we know about it, might give us an indication of what to anticipate if we come back to the level again. Have a great day, everybody. Thanks for being part of the Trader Lab. If you are looking for those 60 PDFs that give you behaviors to observe and things you might be able to mold into part of your trade plan, go to bookmap.com, join the Discord chat. You don't have to be a subscriber to Bookmap. You won't be solicited. There's all kinds of free education, options, stocks, cues, everything, futures, order flow, a lot of different crypto, live crypto streaming, a lot of things for a lot of different interests. And auction market theory, what I do, volume profiles, one piece, But for me, this is what I do, and I hope you get some value out of it, and maybe it'll help you develop further in your trading career. Thanks for being here. We'll see you tomorrow.